Okay, good afternoon, everyone. Thank you for joining the Levinson and Associates weekly training webinar series. So it's our first week of 2021, and I want to thank everyone for taking the time. Second webinar of the year for us. I think everyone is going to walk away with great info as usual. As you know, we handpick these guest speakers, the carriers, vendors to be featured on the training series because it's most important for us that our agents can learn something new, maybe some marketing info, product info, carrier info that you can use to change your practice, right? At the end of the day, that's what's important here. As much as you love listening to us rant for an hour, you need to have some new sales ideas to supplement your income and change the outcome of a new year. So that's the goal every single week, and I think we have accomplished that with today's presentation. So as you also know, it's up to us to go out and find these great ideas, products, carriers, technology, and we need to vet whoever it is and whatever it is, and then bring that information to our field force. So without further ado, jumping into today's presentation, we have Columbus Life, brand new carrier and product rollout for Levinson and Associates. And as you know, we're a direct IMO with Western Southern Life, who is the parent company. And they're also the parent company of Gerber Life, who we do a lot of guaranteed issue with. We do a lot of direct to consumer on the Insure Me Now Direct platform that our agents take advantage of. And of course, Lafayette Life, who is our go-to for whole life, and then Mary Reed's distribution solution concept. And now we're rolling out Columbus Life. And I'm going to just say a few things. We have access to just about every carrier in the country. And we have to make sure that we don't have a Burger King and McDonald's on the same corner. Each company kind of represents a certain niche in the market. So Columbus Life has exactly that, and they fit perfectly because you're going to hear about some new technology product info that you have never heard before unless you were a contracted agent with Columbus through another IMO, which if that's the case, that's fine. Hopefully you'll transfer over to us and get that cash for contracting or leads for contracting incentive where we match or beat your commission grid. But if you haven't been or you're not aware of Columbus Life, again, take out pen and paper, plenty of notes, because you're going to walk away with some great, great information. So, I also think it's important for everyone to understand. I'm going to mention a few things before I open the first slide. This is a different time now, right? I mean, I don't care if you're selling insurance, marketing insurance, if you're selling shoes, if you're a wedding planner, it doesn't really matter. Whatever industry you are in, unless you're one of these Amazon e-commerce sellers, okay, if that's the case, kudos to you. But whatever industry you're in right now, you have to change. You have to pivot, or else you're literally riding a horse around New York City, okay, which you're driving a car in reverse, literally, if you don't and cannot pivot. Okay, it's a new world. You have to market and brand yourself on social media. You better get comfortable with GoToWebinar, with Zoom meetings, right? Because the days of a face-to-face seminar are pretty much gone, okay, unless you have 2 or 3 people spaced out by 6 feet in a conference room, okay, which typically is not the case anymore. So it is so important for you all and us and even the carriers, right, to pivot and make necessary changes to grow their business, especially in this new year, right? We've already seen lots of changes and updates, and it's only been a week and a half. So I just want to make that point very, very clear. We have all of the tools to help you market yourself, to pivot, all of the e-apps, all of the drop tickets, Insure Me Now Direct technology, which is like Amazon for life insurance, but you, the agent, get full commissions and renewals. But this stuff is crucial for you to grow, and you have to accept these changes, right? It's happening. And in my opinion, I don't think it's ever going to go back to the way it was. Okay, think about it, right? We've seen some huge shifts at the carrier level, IMO level, agent level in our industry this past year since February, right? Some big changes. We've seen old school companies, right, that were stuck in the 80s with a 40-page application that you had to mail or fax in. And these carriers said, no to drop tickets, no to e-applications, no to voice sign. Well, they had to make changes. We've also seen some carriers, we've seen one of the biggest exam companies go out of business in 2020. So some crazy times. And I'm going to say that if you don't pivot and accept some of these changes, again, you're going in reverse. So be open-minded and try new things. This is the time. You have to pivot and try some new ideas, technology, get comfortable, okay? And if you're not comfortable on the computer or your iPad or smartphone, whatever it is, you better grab your son, daughter, granddaughter, grandson, niece, nephew, or an assistant to help you get comfortable. You don't have to program software, but know how to run quotes, know how to use an e-app and drop ticket, okay? Get comfortable with selling over the phone. And we have some new trainings, some new podcast episodes that we put together focused on just this topic. Okay, and along those lines, Columbus Life has some really cool new technology. You're going to hear about an e-application, voice sign, non-med products. Okay, so they are rolling with the times, and they've pivoted as a company, right? And Western Southern Life, the big parent, they have pivoted and made necessary changes. And that's part of the reason why we wanted to bring Columbus Life to you all. And you're going to hear that story in just a few more minutes. Andrew, let's jump right in to the first slide. So real quick, what I want to talk about is how we have pivoted, right? We must pivot to help our agents be relevant in today's time. So what we did is we brought on some new software, new technology that we're not charging for, okay? Most of what Levinson has to offer is 100% complimentary. If you look at the left-hand side, Annuity Rate Watch software, that is the best annuity quoter and comparison tool in the industry today, and it's free for all Levinson agents, okay? That simple. We've also brought on a similar platform just for final expense quoting and underwriting. Okay, everything happens in real time. Okay, and what that means, you're on the phone with a client, you're working our lead program, and you say, hey, Mary, I see you're 67 years old, you're on 3 different medications, let me punch this in. You know what? This carrier, this product, this premium came out best for your health situation, all done in real time. You click, go to the e-app or the 800 number for voice sign, you're done. Okay, so that's now available and free for all Levinson agents. We have some new incentives, bottom right corner. Okay, we have, as you can see, up to $3,000 in cash bonus. Okay, we have different levels you can qualify for. We're going to include all of this stuff in today's thank you email, which you'll have in your inbox. We'll also include contracting to get started with Columbus and all of the marketing brochures that we're going over today. Top right corner, that is the only and exclusive term product, okay, that now goes up to $500,000, soon $1 million, where your client can go on your website, they can run a quote, apply, and get approved in less than 7 minutes, and then print and save their policy. And you and the client are done. You get paid full commission. Okay, it's not a referral fee. This is your client. You're the agent of record, and you get full commission. You write your first ad, you get a free tablet. That's simple. Okay, we're running that now. And I'm going to give you a quick example when it comes to term insurance. Okay, so real quick, we had an agent call the other day, and you talk about, Haven's term product, A++ rated. Long story short, agent calls in, has a client. The client is 52 years old, female. And what happened is the client said, look, I am not taking an exam. I'm not having an examiner come to my house during COVID. It's too risky. Okay. And the agent told her, well, no problem. We can get you qualified in the non-med program. It should fly right through. Well, guess what? What happened is she's taking a blood pressure medication, which she didn't tell the agent. Okay. So that came up in the MIB, boom, kicked out of the non-med program. Now they need an examiner to come to the house. She said, absolutely not, pull the application. Okay. We told the agent, quote, Haven term product that should fly through underwriting, standard or better. Okay. So the agent did. He ran a quote, 250,000, 15-year term. It was literally like 7% more than the traditional A plus cheapest term carrier and product. I don't want to mention the name, okay, but it was literally neck and neck. So the agent ran the Haven term quote, sent her the link. She clicked, 7 minutes, ran a quote, applied, approved, done, no examiner, no nothing, no waiting, no underwriting turnaround time, okay, because everything is real time, instant. So my suggestion is to you all in your next term case, run a quote on Haven, compare it to the Banner, AIG, Pac Life, Protective, which, by the way, we have great relationships with. They're all awesome, but no one has a real-time decision in less than 7 minutes, okay, except Haven, and we have the exclusive on it. So anyway, give that a shot on your next term quote or client, and I think you'll be very pleased with the system. I don't think you've ever seen anything like this. Again, it's Amazon for life insurance, and we have 2 new products coming on board. Really, really cool stuff. It's all free for the agents to get set up, and it comes with free scholarship. Okay, let's move forward here. What I want to talk about quickly, and I think this is also important, is once again how we're helping the agents succeed in 2021, especially during a pandemic. So we just put together an unbelievable mortgage protection lead program, okay, with a third-party vendor. These leads start at $6, okay, minimum order of $50 if you want the $6 deal, but that is awesome, and it's an exclusive deal and price they only put together for us, okay, and basically it's because of our 19,000 agents. You're riding their coattails. It's like you're buying in bulk, like Costco versus the local supermarket, but these leads are amazing, okay? I'm telling you right now, we have 7 agents. One of them is on this call right now that is using the program as a pilot, and everything has been working out great. We are launching this platform on the 12th, January 12th, 3 p.m. Eastern. Make sure you're on that call. We're going to have the owner of the company on the call with us, and we're going to go over all of the details. There's 2 different programs, but again, $6 a lead, minimum order of $50. That's a game changer, I promise you. Even if you have your assistant calling all day long and then you step in as soon as there's a qualified candidate that's ready to go, I think it's a no-brainer. Okay, right-hand side. Now, talking about value add, okay, and the value I want to bring to you all, right? That's the Bill Levinson Experience podcast. So I handpicked, as you know, we do these every single month. And for January, I wanted to start the year off with a bang. I want all of our agents to be so happy they listened to the episode for an hour and, again, walk away with good info. So I handpicked one of our top GAs, okay? He's an agent, and he has agents working under him. You're going to hear all about his story based out of Illinois. He has grown his business by 60% during the pandemic. So I thought it would just be amazing for me to pick his brain for 1 hour. I'm going to pretend I'm an agent. I'll put my agent hat on, and I'm going to ask away, and he's going to answer all of my questions, and we're going to talk about how he's grown his business during a pandemic. I think you all would love to hear this. He's a huge producer, huge GA. This is launching middle of January. So I'm going to record this in about a week, and then we're going to launch it to you all. I think you will be very, very happy that you listened in. It's freaking amazing. I'm telling you, this guy is amazing. Great stuff to share. And I think there's no better way to do it than a podcast. Listen in your car, put some headphones in while you're walking around the neighborhood, walking the dog, whatever the case is. But I want you all to listen. And if you leave a comment on your favorite podcast channel, okay, subscribe to the Levinson Experience, leave a comment, and I'll send you the new IUL prospecting book on me, just as a way of saying thank you for listening. That's it, okay? The bottom right corner, that's just a screenshot of the new final expense quoting and underwriting tool that you all have free access to, and it will also be on the Levinson free mobile app, okay? If you're selling final expense, you have to have this on your smartphone, tablet, or computer, or all three. Okay, but it will change your life when it comes to final expense sales. Okay, let's move forward here. Okay, thank you. So what we're going to do real quick, I want to just highlight some bullets without stealing any of Columbus's life, any of their thunder. Okay, real quick, some top IUL products. We're going to dive into a top GUL product that I think is very interesting and fits a niche, an SIUL with low cost accumulation, living benefits built in, non-med underwriting up to, it's actually 100,000, and then they have the voice sign up to $1 million, which we're going to talk about in a few more minutes. Table shave program, that's 3 tables to standard. Okay, I only know of one other company that does that. Some really, really neat stuff. And most important, since they're a Western Southern Life company, free scholarship approved. So another Sage scholarship company to add into your toolbox. Okay, so that means all products come free with up to 1 year scholarship, plus the annual policy review and referrals. And you can give these away for any client that attends your go-to meeting, Zoom meeting, because again, face-to-face seminars, I don't think are going to happen for a while. But use this stuff, and it's all free. There's no commission reduction. We're going to talk about it more after the presentation. All right, let's jump right in. Okay, so from Columbus Life, we have Mr. Sherman Reeves, our VP of Sales. That's going to jump into the presentation. Sherman, you there?
I am here. Thank you, Bill. Very much appreciate it. Just wanted to take a moment to hop on the call. It is not every day that we get the opportunity to announce a new affiliation with a firm with the history and longevity that Levinson & Associates does. And so we're excited to be here, and it's nice to join an organization where so many of our sister companies are already in place. But just wanted to take a couple of moments and thank you for being here and just give you a quick history on Columbus Life and a couple of key salient points, and then we'll get into the detail that you really want to hop into. For those of you that are not familiar, we're a mutually held 115-year-old company founded by an independent producer that has served independent producers throughout its entire history. And so that's what we wake up doing every day, is working with folks that are out there running their own businesses, being independent, understanding that we have to earn business. And at the same time, we feel like, especially coming out of this year, which is the oddest year I've ever experienced in the business, we bring exceptional financial strength with that 96 Comdex. And we also have an exceptionally strong balance sheet to go with that. When you start looking at capital surplus, which is essentially the excess capital companies have, Western and Southern Financial Group currently sits on double the average surplus of your average stock company. So I think the last number I saw was about 19% surplus. So we are exceptionally strong, sitting on billions. That's a promise that we make, a promise that you can make to your clients, that we are built and managed for these difficult times. And as a result of that, one of the nice things is we did not have to make radical product changes, major adjustments in the last 12 months. We continued to build our portfolio, add strength, and add organizations, and we're excited to be here today. Just a couple of quick notes. One that I think is particularly important is with conglomerates and large insurance organizations now, everyone that works for Columbus Life is in Cincinnati, Ohio, except our regionals. So with the great support group you have at Levinson & Associates, they can reach out to folks in one building, get things done, get to the people that matter, and they have direct access to anyone that they want to reach out to, which we think is important. Secondly, we have a completely digital platform. So we have e-app, e-delivery, and then we also have a mobile app that you can use to send requirements in. Is the latest enhancement that we put there. So I could not agree more with Bill regarding having to adapt. And if you think about it, we've adapted. I've done more WebExes in the last year, really in the last month, than I've done in the prior years, just by virtue of how we do business now. E-apps are also taking on huge adoption rates. Last year, we went to 83% of our business is now e-app. And when you think about that for people that have been a paper-driven industry, that is a massive move. We have large agencies that are affiliated that now do 95+% of their business on an e-app basis. So if you're not on board, it's easy. Hop on. Your clients are likely to be doing it in other parts of their business. So a great opportunity to do that. So with that said, just wanted to hand it over to Andy Cowan, who is our training coordinator. He will bring you up to speed on our UL, IUL, which is our #1 seller, SIUL, and all of the great things that Columbus Life has to offer. So with that, just want to say thank you for having us. Bill and Andy and team, thank you for allowing us to be a part of the organization and try to earn our stripes. And we look forward to working with you. With that, I'd like to present Andy Cowan, the training coordinator for Columbus Life.
Thank you, Sherman. Thank you.
Hey, Sherman, thank you very much. Thank you for the introduction. Good afternoon, everyone. I want to start by saying, Bill, Andrew, thank you for organizing this call. Thank you for having me on today. I am thrilled to be here. As Sherman said, on behalf of everyone here in the Cincinnati home office, we're thrilled about this new relationship and looking forward to a great 2021. As Sherman said, what I've been asked to deliver today is really to do a quick highlight of our product portfolio, particularly the universal life products. We are going to spend the bulk of today talking about our flagship policy, the Index Explorer Plus UL. We will talk about the Survivor IUL as well, and then we'll round out with the other UL products too that Bill alluded to, the GUL in particular. So with that being said, let's start with the Index Universal Life. And the first thing you need to know about Columbus Life's Index Universal Life, again, it's the Index Explorer Plus, is that it is a straightforward, simple designed Index Universal Life policy. Now, simple doesn't mean inferior. It just means that it's straightforward and it's easy for you to understand. And I would argue it's going to be easier for you to place with your clients. When we say traditional Index Universal Life, what do we mean? Well, we don't use any sort of multipliers. For those of you familiar with Index Universal Life, you know multipliers are kind of all the rage right now. And the really good thing about Columbus Life not using multipliers is we have this true 0% floor. Now, back in the day when Index Universal Life policies, just index policies in general, were coming to fruition, this was the great thing about index policies. They had a true 0% floor. Well, these multipliers, they've kind of taken away that 0% floor. And we got a slide here in a little bit to go into a little bit more detail about that. But please be aware, I'm not here to deride multiplier policies. That's not what I'm doing. But do understand that philosophically, we've chosen a different route with designing our Index Universal Life policy. We also have a guaranteed persistency bonus, and as has been alluded to previously already in the call, we get all of this. It's all backed up by the history and financial strength of Columbus Life. I'll reiterate once again, a 96 Comdex rating, which puts us in rare company. Regarding the Index Explorer Plus, obviously, any sort of index policy, it's important to understand the allocation options, right? This is the engine that's driving the car, so to speak. And the first thing you need to know is that Columbus Life, we only use the S&P 500. We don't have any other index options. There's nothing else available. It's only the S&P 500. And I would argue that's a good thing. One, it keeps things simple. But two, look, let's face it, most of your clients or most of your prospects that you're going to work with, they've heard of the S&P 500. And over the long term, the S&P 500 has proven time and time again that it works. Okay. We also have dollar cost averaging accounts. We also have a premium deposit account. We're not going to go into details on either of those today, but do know that they are there. And I will say, as far as the dollar cost averaging account goes, you'll be pleased to know that the DCA accounts have the same interest rate as our regular fixed accounts. So let's get into the allocation options in a little bit more detail. So we have 3 allocation options, again, all based on the S&P 500. The one that I'm going to really highlight is the one you're seeing right now on your screen. It's in green, and it's just a plain vanilla capped annual point-to-point. Now you're saying, well, what's so excited about that? What's so exciting about that? What's so exciting is that our cap's 11%. Now, I don't have the competitive intelligence to tell you that an 11% cap is the best in the industry, but it's really good. It's really competitive. And if you look at what's going on out there in the marketplace and just the world at large, an 11% cap is really good. And we've held this 11% cap now, I think, since going back to last March. So we are proud of that. We are very happy to have that 11% cap. The other thing I want to point out is our fixed account. Right now, our fixed account is paying 4.2%. And I'll say the same thing that I said about the cap. I don't have the competitive intelligence to tell you that 4.2 is the best in the industry, but it's really good. It's one of the best. You're not going to have to apologize for an 11% cap or for a 4.2% fixed account. As far as the other allocations go, when pricing changes, and eventually it will change, when pricing changes, this one in purple will be very, very attractive. Right now, it's not so attractive due to pricing pressures, but it's an uncapped annual point-to-point with spread. What's unique about it is the spread's in the middle. So you earn up to the threshold rate, the spread comes out of the middle, and then anything above that is uncapped. You know, if you rewind the clock back, I don't know, maybe 3 years or so ago, I mean, there were people getting like 22, 25% returns in that spread account, which in an index policy is frankly, is remarkable. But again, right now, not that attractive. There's not a lot of premium going into that account. The last one is the uncapped monthly averaging account. And the way that one works, they're just going to take 12 different month anniversaries, average it out over the course of the year, divide by 12, and that'll give you your rate of return. Again, both of those uncapped accounts really aren't that attractive right now. The one you want to look at is the capped annual point-to-point, and that cap is at 11%. And of course, the fixed account at 4.2. Spent a lot of time talking about traditional index universal life design, and one of the things that really I want to point out, as I said before, we don't use multipliers here at Columbus Life, and I'll reiterate, it's not to put them down, it's just different. And so because we don't use multipliers, we don't have any asset-based charges. And that's very, very important. It's a key distinction, because when you have, when the zeros come, when you have down years in the market, or when you're getting 0% credited to your index life policy, some of these other carriers, in order to pay for these multipliers, what do they have to do? They have to have asset-based charges. So let's look at this chart that you see on your screen. On the left-hand side, the column on the far right, this is a traditional IUL design where you're very simple. You earn up to your cap, and then anything above your cap you don't participate in, right? So you can see the cap, and this is all hypothetical, of course, but the cap is right around 11 or 12%. Anything above that cap, the client doesn't participate in. The really good news is that when the market's down or you get a 0% credit, you don't have that much at risk. Yes, there's some cost of insurance, there's some admin fees, but generally speaking, your client's not really losing anything. Now compare that to the multiplier design, which is the one on the right. Obviously, you earn up to your cap. Most of the time, that cap is lower than what we're going to be able to offer. But you can earn above that cap because of the multiplier. Now, what's the downside? The downside is when the zeros come, when you have down years, those asset-based charges aren't going away. The carrier is still going to charge those asset-based charges. And so now you almost have like this fee that you might even have like on your brokerage account, right? That is going to potentially hurt your client's cash value in a year where you don't have any positive interest credit. Again, not to deride it. I'm not saying it's bad, but it's very different. And so understand that Columbus Life has a true 0% floor on their index universal life. Speaking of expenses, you can see the charges right there. These are all very competitive. In some instances, they're much better than what else is out there in the industry. Just know, obviously, up there on the screen, the cost of insurance will obviously change based on underwriting, gender, age, all that kind of stuff. Premium expense charge 6%. The cost per thousand is only charged for 10 years. A lot of carriers will charge for more than that. And you can see the guaranteed there. We've never charged guaranteed expenses here at Columbus Life, which is something I'm proud to say. But you can see what the expenses are there. And of course, if you look at an expense ledger, you'll see that generally speaking, we are one of the lower cost carriers out there. Something that's important to understand, if you remember the beginning of the presentation, the beginning of my part of the presentation, I mentioned Columbus Life has a guaranteed persistency bonus. Obviously, the allocation options, again, are really the engine driving the car here whenever it comes to index universal life and the way the cash value can potentially grow. But something that Columbus Life does to help your clients grow more cash value is offer a guaranteed persistency bonus. And I need to take a moment to explain what I mean by guaranteed persistency bonus, because not all these persistency bonuses are created equal. When I say guaranteed persistency bonus, what I mean is, of course, it's contractually guaranteed. You can point into the contract, show your client where it is in writing that we're going to pay this bonus. But more importantly, there's a couple other things that we mean by contractually guaranteed persistency bonus. First of all, there's no performance trigger. A lot of these persistency bonuses, you need a performance trigger. With Columbus Life, it's not based on any index performance. Columbus Life is going to pay the persistency bonus regardless what happens in the S&P 500. And what's just as vital is that that bonus will be credited even if the client accesses some of their cash value, either a loan or withdrawal. Now, let's compare that to a non-guaranteed bonus. And full disclosure, there's a lot of carriers out there who love to talk about, quote unquote, their guaranteed bonus. But if you look at the fine print, they're not really guaranteed. Obviously, there are some bonuses out there when we're looking at the non-guaranteed column. It's just as simple. It's at the carrier discretion where, hey, we had a bad year. We're not going to pay it this year. That's not how Columbus Life works. Or there's some sort of positive market performance trigger, right? Some sort of performance trigger that you need, the S&P or the index needs to be up or interest rates need to be up or whatever the case may be. And something you really need to look at, especially if you're selling this, is, hey, you can take money out of this in the future, whether it's for supplemental income or whatever the case may be. They may not credit the bonus if the client accesses the cash value. Very, very important distinction. Obviously, you know where I'm going with this. Columbus Life's persistency bonus is contractually guaranteed. It'll always be paid as long as the policy is in force, beginning in contract policy year 11. The question is how much, right? So if the client was 30 or older when the policy went in force, the client's going to get 50 basis point bonus. If they happen to be a little bit younger, if they were 29 or younger when the policy went in force, it's a 25 basis point bonus. So either 25 or 50 basis points, depending on issue age. And again, contractually guaranteed. There are some people who think, well, that's not that big a deal. Who cares? Look, over the long run, to get a 50 or 25 basis point bonus that's contractually guaranteed, you know it's going to come each and every year, beginning in policy year 11, can make a big, big difference on the potential cash value accumulation inside your client's contract. And frankly, it really helps when you have those years where the market is down, to know that you have some sort of positive interest credit that's coming. Obviously, we already talked about the allocations, but something else that I think is important for everyone on the call to understand is this concept of linked rates, this last bullet point, linked rates. And when we say linked rates, what we're talking about is comparing what I'm going to refer to as new money rates, meaning policies that go in force today versus in force business. Okay, we're seeing more and more carriers out there in the marketplace where they'll say, hey, you want to put a new index universal life policy in force today, your cap rate will be, and this is hypothetical, they'll say it's going to be 10%. We're going to give you a 10% cap on policies that go in force today, but your in-force policies, well, they're only going to get an 8.5% cap rate. Columbus Life doesn't do that. What you see is what you get with Columbus Life. Our cap rates, what's published on our rate sheet. So as I alluded to a moment ago, that 11% cap, that is what your client gets, whether you're putting the policy in force today or you had a policy that was in force last year, 2 years ago, 3 years ago, whatever the case may be, and the allocation window is maturing. That client that had a policy that went in force 2 years ago, for example, they're going to get that 11% cap rate too, assuming they're allocated to the cap annual point to point. With Columbus Life, the new policy rates and the in-force policy cap rates, they are the same. This means that the illustrations that you are showing your client are more likely, they have a greater chance of being accurate compared to some other things going on out there in the marketplace. We spent a lot of time talking about potential cash value accumulation. Let's talk about how we actually get our hands on it in the event that we need to take a loan or withdraw, whatever the case may be. Columbus Life, obviously withdrawals are always available. We have 2 loan options, either a standard loan or participating loan. Quickly, beginning on the standard loans, beginning in policy year 11, if you are selling this for potential cash accumulation and you're going to, you're talking about taking income later on down the road, know that beginning in policy year 11, on the standard loan, it's a true wash loan at that point. Columbus Life is going to charge 2% interest on that loan beginning in policy year 11, but will also credit 2% beginning in policy year 11. If they take a standard loan in the first 10 policy years, which they're certainly allowed to do, the charge is 2.5%, but we will also credit that 2% for a net cost of only 50 basis points. You look at what it costs to borrow money at a bank, even with these low interest rates, 50 basis points is a good deal as far as borrowing money. Regarding the participating loans, you can see it there. We're going to charge 5.5% regardless when the loan takes place. And the crediting, well, it all depends. It's participating. participating in whatever their underlying allocation options are. So they're in the capped annual point-to-point. The S&P 500 returns, I don't know, 7% in a given year. They're going to get credited 7% on that loan, just as if it was, just in their regular account, in the underlying cash value. They're going to get credited 7%. They're charged 5.5%, meaning there's a net positive arbitrage here, folks, of a full 1.5 or 150 basis points. Right, that's one example. Now, obviously, there's more risk in a down market. Clearly they could have to pay the full 5.5%, right? But that's how it works. Those are the two loans that we offer here at Columbus Life. So that is high level. That's how the Index Universal Life policy works here at Columbus Life. As was discussed earlier, you can use an e-app on that. Chad later on in just a minute is going to talk about some different underwriting programs that apply to the Index Universal Life. Just talk about niches in general. But you got a simple, straightforward, traditional Index Universal Life. It's a policy that you're going to be able to understand. You're going to be able to place it with your client. And it's a policy you're not going to have to apologize for. And I think that's important. So with that being said, let's move on to the Expedition SIUL. This is the Survivor Index Universal Life. It's the newer policy. You're going to see really a lot of similarities between this policy design to that of the Index Universal Life. Okay, the key difference, there's a few key differences, but one key difference, of course, is that there's two insureds, right? It's a Survivor Index Universal Life. And to be clear, it is a second-to-die policy. We do get that question every now and then. It's a second-to-die policy. Issue age is 20 to 79, minimum face amount of $100,000. Same allocations options as the IUL. You got the same options. You got the same fixed account. All those things still apply to it. You also have the contractually guaranteed persistency bonus, except this time it's 50 basis points regardless of issue age. So that's a little simpler, a little easier to remember. And that begins in policy year 11, just like how it does on the regular Index Universal Life. How are we positioning this? Where are we seeing success? And to be clear, let me be clear about this. We've seen some really large tickets come in with this policy. We've had some really, in just a short amount of time, some really good success with it. Where are we finding success? Well, setting up for max funded policies, we're finding that this looks really competitive if you're trying to max fund a contract, or really not even necessarily max fund, but just you're using it, maybe you're not max funding it, but you're funding it more than just the minimum premium to get it to last to 120. The cash value growth on this looks very attractive. The other area we're doing this in, and it does apply to the max funded sale here, are uninsurable sales, because it's a survivor policy. We're uniquely positioned where you sit down with dad, right? Or you're talking to dad and you're talking about the benefits of Index Universal Life, but by talking to him, he's not going to get through underwriting. For medical reasons, he's not going to get through underwriting. Well, if he's married, for example, you could put his spouse on this contract, do the same exact sale that you were going to do with just a regular Index Universal Life, do the survivor, assuming his spouse is healthy enough to get insurance on her own. You'd be able to include both of them on the same contract, even though medically he wouldn't be able to. Some details here, some technicalities. If you have an individual with their life expectancy for whatever reason is less than 12 months, this isn't going to work. If someone's terminally ill, it's not going to work. But generally speaking, you should be able to include them as uninsurable yet includable. This opens up a lot of opportunities for people where maybe you've talked to them last year and they couldn't get approved for whatever reason. Go back and talk to them. Tell them you got an idea for them now. The key is obviously the death benefit's got to be designed for the next generation. Of course, Survivor Index Universal Life, or Survivor insurance in general, is a great way to create or enhance a legacy, obviously due to the power of Survivor insurance. Obviously, it's maximizing the amount of money that's going to go to the next generation when both mom and dad are gone, or when both grandma and grandpa are gone. And there's all kinds of different wealth transfer planning strategies to be deployed using Survivor Index Universal Life. But then don't forget, sometimes we forget the basics, right? Because that is Survivor Index Universal Life, generally speaking, should be less expensive to insure two lives with one policy than two separate policies, right? So again, if the money is going to the next generation, you'll either save some money, or you'll save some clients some money by using this policy, or buy them more death benefit, depending on however you want to look at it. Generally speaking, it's cheaper to insure two people than one on one life insurance contract, Regarding the other universal life policies we do have just a plain current assumption universal life policy, just declared rate, very traditional current assumption universal life. this is a policy that, it does fit a need. You'll meet clients. They just don't know mess with the index. You just can't get them over that hurdle. Well, this fits that need. You need some flexibility in your design. They like cash value, et cetera, et cetera. This can fit a need for those individuals who don't want to mess with an index. But then one thing you definitely want to know about this policy is the Voyager GUL. It's guaranteed universal life. A lot of people call it term for life. There's very little to no cash value accumulation in this contract. You got a no lapse guarantee to either 90, 95, or lifetime. When we say lifetime, that means age 120. And you should note, it's guaranteed to age 120, but your premium only lasts until age 100. Again, it's all designed to give you some affordability for permanent life insurance coverage. People don't want to mess with cash value. They don't care about cash value. They just want to pay their premium and know that death benefit's going to be there. This is a great solution. And again, you can use this for on our e-app system and all that kind of stuff. All those things are available to you. I know we're coming up on time. If there are questions, I'm happy to answer them. I do know that Chad has some further comments that he'd like to say, but if we want to pause here and take questions or just keep on moving, we can do that as well.
Yeah, what we're going to do, we have our question box on the bottom right corner. If everybody wants to just type in questions, Andrew's answering everything in real time. If we can't get back to you, we'll answer right after we close the webinar. So yeah, let's let Chad take the wheel and we'll go from there. Great job.
Thanks, Andy. Thanks, Bill. So yeah, definitely excited to be here. I'm glad to be working with Levinson again. I'll be your regional. I'm in Orlando. So wanted to share a few niches on why work with Columbus. We know about the products. We know about the stability. Now I'll just touch on some of the niches that we have. First thing is the non-med. So we have a traditional non-med program for clients that are up to age 50 and buying a death benefit, a permanent death benefit up to 100,000 in face. So 99,999. If the client's a little bit older, they're more in that final expense type space, between ages 51 and 60, they can get non-med up to 50,000. And this is a market that we actually do have a pretty good foothold in, and it's not one to sneeze at. I see premiums come in $3,000, $4,000, $5,000, $6,000 on a client's death benefit that they just need it. It's non-med and it's easy to get done. So we do children as well on that, up to $1 million in face. That's a separate conversation we can have later. And then we also have accelerated underwriting. So that's another thing to make a note of. We've touched on that a little bit today. On our IUL product, between the ages of 20 and 55 and face amounts between 100,000 and $1 million. I'll say that again. Ages 20 to 55 and face amount between 100,000 and $1 million. We have an accelerated underwriting program where we do electronic underwriting behind the scenes, and we try to get the client to not have to do any blood, urine, or exams. They do a phone interview, and it's a pretty simple program if it works the right way. That can be done from start to finish in 5 to 7 business days. I've seen it happen. Not everybody qualifies for that. Once they go through the process, maybe they're a little overweight, have a driving record or some other issues, taking a medication. They get put right into regular underwriting, and they can get standard all the way up to our best offer. So I know there's some carriers in the market right now that will tell you we're going to go through the accelerated underwriting, and if it doesn't work out, they may give the client a negative offer below standard. We don't do that. We're going to give the client up to between standard and preferred best. Just in most cases, we need to do that exam, blood, urine, and get more information. So accelerated underwriting, 100 to $1 million is good. All of our permanent policies, you can write what we call the e-app, and that's on iPipeline. So it's a complete app for the most part. It's you hit on each link through iPipeline through their Levinson website, and you're going to fill out everything, and that'll go right into our system. So all of our permanent products, you can use that. And then we also have e-delivery, which has been awesome during the quarantine and people working from home and clients doing business without seeing you as the agent. The e-delivery, it gets issued right away. You get an email, the client gets an email, you both sign it, they can pay right there, and it just speeds up the process. I think it takes about 4 days off of it. If you're using our e-app and our e-delivery, our stats are showing that you're going to shave 16 days off the application process. So touching on that, next thing I want to touch on is we have the table shape program, which Bill mentioned. from table 3 to standard, and that's on our permanent product, up to 1 million in face and up to age 60. So you're buying a permanent product, the client maybe has diabetes or something minor, but it takes them out of standard and takes them to like a table B, a table C. They automatically get moved up to a standard. Another thing that's good for is if you're writing a term policy, you might be able to get a lower premium on an IUL. So we monitor that and we kind of look through it. So first, those are a few things to touch on. We didn't highlight it today, and we'll go in more detail on our next call, but we have chronic illness on all of our products, including our term product. So term and all of our permanent products have a chronic illness rider that's no cost unless the client uses it, real streamlined and easy. It's on almost every product that's written, unless the underwriting says, that this person doesn't qualify. Maybe they have some medical issues from a physical standpoint, and it's pretty obvious they're not going to qualify. But otherwise, they go through the underwriting and, chronic illness. And we don't have a lot of competitors out there that have chronic illness on our term, but that would be one reason you would sell our term compared to some of the other options that Levinson has. Last thing I want to do is touch on our annuities real quick. Our primary focus in the market is life insurance and our indexed universal life, like Andy mentioned. We do have a couple reasons that you would want to look at us for the annuities. First of all, our ratings are great. So from a financial standpoint, we get a lot of larger cases in the annuity world because of our ratings. We have a fixed index annuity that gets used a lot in the rollover market. And the reason is the guaranteed income rider that I'm sure a lot of y'all are familiar with. Depending on your age, the client's going to get a 5%, a 6%, or a 7% roll up. So fixed index annuity, not real sexy as far as the caps, but if the client comes to you and says, hey, I've been working at the school board or at the state for 30 years, I'm going to do a rollover. I just want guaranteed income. I don't need to continue to work on growing my account. Then the roll-up really works well. And we have a couple agencies in Florida that are tops in the nation that do nothing but rollovers every day, all day. So indexed annuity, rollover, talk to your team at Levinson about that. And then our fixed annuity has a real good fixed rate. In Florida, it's 3.5% because there's some laws around that, I guess, that makes it a little higher. So 3.5% fixed annuity in Florida and Mississippi, 3% everywhere else. And the reason is that product gets sold a lot is because it has a return of premium. So return of premium, almost like a CD or CD alternative. If you have, let's say you have it for 1 year, you're going to lose your interest that you gained in that 1 year, but you're not going to lose your principal. So gets used as a short-term parking spot compared to a CD, gets it into your control as the agent and make a little bit of money on it. And then lastly, we have a SPIA that automatically can go into one of your life products that you're selling to the client. If you have a big sum of money or you want to get that out of the estate, put it into a SPIA, comes out from an income standpoint, goes right into the life insurance policy. That is it on my end. I want to thank everybody for your attention, and I'll pass it back over to Bill and the team.
Yep, that was great, Chad. Right to the point. So as you can see, as I mentioned earlier, lots of value add here. I feel like we have some new niches that we can use Columbus Life for. I would get started right away. We'll include everything in the thank you email. We're also going to do a incentive giveaway. We're going to, let's see, right before 4 p.m. Eastern time, we will end. We have about 7 minutes left. I'll ask the question at the end. Whoever's first to answer wins. Sherman, Chad, Andy, that was awesome. That was right to the point. You guys did a great job. You're going to hear more from Chad and his team at Columbus in the near future. We're going to load up our website with all of the marketing material. And, I was just thinking as Sherman was talking in the beginning, we have this consumer marketing video that we can brand for you. It's a 2-minute living benefits video, and it's designed to drive traffic or leads back to you. You can use it on YouTube, on your social media page, website, blast it out. and we will literally create this for free with your picture, your logo, your phone number. We'll send out a sample in today's thank you email. You just let us know if you want to be set up and you want the video, okay? But no charge, as long as you're active with us. Okay, so what I'm going to do real quick is have Andrew take the wheel. We have some new updates in the IUL Experience and the scholarship program that falls perfectly with Columbus Life's products. So great stuff. Andrew, you there?
Yes, sir. Thank you, Bill. Appreciate it. I want to dive into our IUL experience. And right now, we just heard, Columbus Life give an excellent presentation. It's obvious with IUL that there could be a lot of moving parts, right? Different indexes, cap rates, participation rates, and we wanted to make it really easy for you, especially going into 2021 with all of the AG 49 changes and the different things that the carriers are doing to adjust their products. We wanted to make an experience or a center for you that's easy to follow and everything's all in the same place, right? So what we did is we developed the IUL Experience. It's free for all Levinson agents, regardless of where you are, how many contracts you have. It is available to you right now on levinsonassociates.com website, okay? So you go here and everything's available to you. Turnkey, sales scripts, marketing materials, presentations. We have brand new trainings that we just uploaded to the system not too long ago with Mary Reed and a lot of others. So you definitely want to check that out. All of the sales software you need to present the IUL, of course, all the product information and all the cap rates and floors and all that stuff. So you want to check this out as soon as possible because all of this stuff's going to get uploaded, specifically all the new Columbus material, right? So I'm getting a lot of great questions from everybody on the call today, which is great. And we're going to make all of this available at the end of the webinar and right here on IUL Experience. So definitely check this out. It's worth your time. I promise you that. Next up here, I want to dive into our SAGE scholarship platform, okay? Columbus Life and Lafayette, both owned by Western and Southern, as Bill mentioned earlier, are now part of the scholarship program. So any product that you sell with these carriers will get you the full up to a 1-year college tuition discount at over 423 colleges across the country. This is a very powerful tool. If you're thinking about, your resolutions for 21 and what changes you're going to make to your business, if you're not using the scholarship program, there's no reason why you wouldn't, because it's absolutely free for everybody. We pay for the entire thing for you. We have turnkey marketing campaigns for you. And just so you know, this is a working program. We just got some stats in from 2020. $83 million were redeemed by students in 2020. 83 million. That's a big number. So we know that this works. You can give points out for referrals. You can get points for policy reviews. Think about this from a retention standpoint, right? You give this to your client, they're going to get more benefit the longer they keep their policy, right? If they're happy, you're happy, and everybody wins, right? So this is a system that you can use to generate leads, create referrals, and keep the policies on the books. That is extremely important. I can't overstate that enough. You can see all the carriers that are available to you at the bottom of the screen. We have everything you need, turnkey, ready to go. So I just wanted to mention that. It's a huge feather in your cap, and that will win you the deal in any competitive situation. I'm going to go ahead and get it back to Bill. We got a few more slides, and we'll wrap it up.
Good stuff, Andrew. Also, keep in mind that's literally 12 carriers. If you were appointed with any of those carriers before, you can go back to those existing policyholders and say, hey, Mary, Steve, great news. Because I'm an active Levinson Sage agent, I can give you now the scholarship for your grandchild or your children or your niece or nephew or any blood relative, even for past policies sold. And it doesn't cost them a penny, or it doesn't cost you anything. So the opportunities are endless here, and Columbus is part of the program. So anyway, I just think that you talk about, hey, I need a new marketing idea. I got to get myself out there in 2021. Everything is here on a silver platter, okay? But you have to try new things. Try that living benefits consumer video that we just created. It's free. So if you get 2 people that watch it or that like it, great, 2 more than you had yesterday. So anyway, this is the year you have to try new things, get comfortable with social media and branding and marketing yourself, okay? Especially you think you have the gift to gab, you got the hotshot personality in South Florida. Have your spouse record a 1-minute video with you talking about some of these new IUL products or living benefits or the scholarship program. Get it out there on YouTube, on your website, e-blast it, social. It's up to you, but you have to put your right foot forward and make it happen, okay? So 21 is the year to try new things and leverage our platforms. It's that simple. Okay, our second to last slide, and then we're going to wrap this up. These are some of the upcoming trainings that you must take note of. The biggest one of the year, I'm telling you right now, is going to be our new mortgage protection lead program rolling out next week on the 12th, 3 p.m. Eastern. Make sure you're on that call. I promise you, you're going to love this program. Right below that, we're talking about all of the new AG 49 updates, how it will affect you, how it will affect future IUL sales and illustrations. Make sure you're on that call on the 14th, 3 p.m. Eastern. And then, of course, we are having the big annuity kickoff webinar for 21. And of course, that's on the 21st. So 3 p.m. Eastern, don't miss that call. If you're new to annuity sales or you're a veteran, everyone will walk away with great information. We pulled in one of the best third-party annuity consultants just for that call. So you're going to love what he has to say. Okay, our last slide here, and of course, it's a Positive Tuesday quote. And again, Positive Tuesday, what does it mean? Nothing, okay, especially today's Thursday, okay? But bottom line is, this is just an example. Don't listen to what we say. Watch what we do and do those same things for your marketing and branding. The carriers do it to us. We do it to the agents do it to prospects. Okay, you don't have to reinvent the wheel. If you look at all of our social media pages, we have over 1,000 likes and comments consistently and growing every day. And we're not out there in the retail space. So think about that. Your pool is much larger than ours. Our pool is the agent pool. Your pool is the consumer prospect pool. Okay, so the opportunities are endless. Real quick, this is the quote, and then we'll ask our question of the day. If this pandemic didn't bring out the loving, caring, and hustling side of you, I'm not sure it's in you. See the light, everyone. Make sure your right foot is mashed to the floor and you are innovating and pivoting and making things happen. Try new things for the 17th time on today's webinar. Please write it down. Try new things 2021. Question of the day. So whoever answers first and correctly wins. The new Amazon Echo just came out. I have one here in a box ready to be shipped out to you. The question of the day. Everybody ready? The new mortgage protection lead program, tell me the cost and the minimum order amount. Tell me how much they are and the minimum order. What is that number? So it's two numbers, the cost and the minimum order amount. Andrew, do we have a winner?
We do. We have a winner, and wow, we got a lot of great responses. But first to answer is Keith S. Keith S. Yep, and he is from Texas.
Keith S. from Texas. Congratulations. The answer is $6, minimum order of $50. Congrats, Keith. Thanks again, everyone. Look out for the thank you email in your inbox before we wrap up today. Thanks again. Let's all have a happy and healthy new year and try new things. Take care.